Let's see what is going to happen. It is 11:57 and we are checking the Bank of England's website to see what their decision is going to be for their June meeting. There's no Bank of England base rate meeting in July, so after this one, the next one will be in August after the election. Let's see what happens today. I have got a slight feeling that we are going to be staying where we are at present, and hopefully August will see the first rate cut since 2020. Now, if that does happen, the positive message it'll send into the property market is fantastic. People will start to think about moving if they were moving, or they've tried to sell their property but they haven't been successfully able to do that before. The only issue is that those transactions completions won't probably take place until 2025. So 2025 is probably lining up to be a great year for the UK property market, but let's see if we do get something beforehand. A lot of people have been saying that the Bank of England won't do anything purely because of the fact that there is an election, even though the Bank of England is independent, and this shouldn't make a difference. They don't want to be seen to be favouring one or another party. So even if that is the case, let's see. Also, given the slow response the Bank of England has previously had in acting when one would argue rates are needed to increase, I think they'll be slow coming down, and the likelihood is that even though the ECB has moved, the Canadian Central Bank has moved, that they won't have the kahunas, let's say, to move before them. So let's find out. It's 11:59 and we are refreshing the Bank of England's page to see what is happening from here onwards. 12 o'clock, we've hit 12 o'clock. Let's see what's happening. Come on. We've got the news wires as well to see if any of them are reporting it any earlier. $5.25 is a hold. $5.25, the Bank of England has held the base rate. The next meeting is on the 1st of August. Let's see exactly what they have said in their report that usually comes out. Okay, firstly, let's look at the voting history and let's see how the votes have moved today, because that gives us an indication of who was for the cut and who wasn't for the cut. So let's have a look. On the 20th of June meeting, Andrew Bailey, the governor, hold. Sarah Breeden, hold. Ben Broadbent, hold. Swati, who has been going for a decrease 5% from Swati. Megan Green, hold. Jonathan Haskell, hold. Catherine Mann, hold. Hugh Pill, hold. Daves Ramsden, 5%. We've got two members out of the 9. 2 out of the 9 are going for rate cuts. Only 2 out of the 9. Now, I would have liked to seen a greater mix of people there actually vote to decrease the rate for future rate cuts to be more likely. The fact that we've only got 2 out of 9 members of the MPC looking to cut rates, which I believe is similar. The voting pattern is similar from the 9th of May meeting. The 2 people who have voted for the rate cuts were Swati Dhingra and Dave Ramsden, and they have voted as well. Everybody else has voted to say the same. This, I don't think, is great news for the 1st of August, because this could mean that it's going to take them a little longer to get the confidence to do anything. I don't like that. I don't like that whatsoever. I don't like that. I do not like that. I don't like that. That is not looking good for August. I don't like that. I don't like that at all. I do not like that. I don't like that. And if you hadn't got the gist of what I was saying, I don't like that. Given only I don't like that. I don't think that is great whatsoever. That is not where we wanted to be at this point. I wanted to see more people voting to actually hold rates. I don't like that at all. For one of the members of the Bank of England, MPC Ben Broadbent, this is his final meeting. He's been with the MPC since 2011. But looking at the voting history, how did he vote on this occasion? He voted to keep the rates the same, which I don't think is going to make a huge bit of difference anyway. So I don't like that. I do not like that at all. Thank you very much. The economy's economic growth is on its knees. GDP is 0.6%. I do not like this whatsoever. I think this is going to lead to a more subdued housing market regardless of what happens in the election. August will be the next key date, but looking at that voting split, that's not giving me a lot of confidence that August will actually lead to the cuts that we're seeing. Now, some traders are paring back even further the expectation of whether that is going to... some people are paring back the expectation of whether that is going to happen. So Bloomberg did a poll, not a poll, they had a prediction of where people would vote, and Ben and Dave, they voted, would go for cuts, and Andrew Bailey and the rest, Andrew Bailey, Ben Broadbent, Sarah Breeden and Hugh Pill, they were saying we're going to leave rates on hold, with Haskell and Mann tightening as well. And considering where we are looking at the voting record, that doesn't give me massive confidence for February. I don't like that at all. I don't like that at all. Okay, so let's go back into the Bank of England. So, as I said previously, it's not just what they say, what the rate is, it's also how they vote, and it's also what they say in the monetary policy summary that comes as a result of it as well. So to meet the at the meeting, 2 members prefer to reduce the 12-month CPI fell to 2% from 3.2%. The inflation target is 2%, close to monetary policy projections. Have also continued moderate. CPI is expected to rise. They expect CPI inflation to rise slightly in the second half of this year. Even though inflation has come down to where we want it, 2%, I don't think it will stay static at this level for some time. Even if it dips down slowly, there are expectations that it will rise, but the Bank of England has been saying this in their reports for some time now, so that should come as no surprise. So if inflation dips down and then starts trickling up, that is actually to be expected. Still uncertainty around estimates derived about the ONS labour force survey means it's difficult to gauge the evolution of the labour market. The labour market seems to be something here that the Bank of England are still concerned about, even though we had some data out today that suggested that there's retail weakness in the high street, that people are not spending, and also there's a rise in, I think, direct debit defaults or bounce direct debits coming through, but that information was too late to be factored into this meeting here that we've had today. Labour market still needs to be an issue. It still appears to be an issue. So essentially what they're going to want to see is an uptick in unemployment and a cooling in wage price inflation. The MPC's remit is clear. The inflation target applies at all times, blah, blah, blah. CPI returns to stability at the meeting. The committee voted to maintain headline CPIs back to the restrictive stance of monetary policies weighing on activity in the real economy is leading to looser labor. Key indicators of inflation persistence have continued to moderate, although monetary policy will remain restrictive for sufficiently long to return inflation to 2% target in the medium term. The committee has judged since last autumn, blah, blah, blah. The MPC remains prepared to adjust monetary policies warranted by economic data to return inflation to 2%. It will therefore continue to monitor closely persistent inflation data, blah, 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 blah. Turning that. As part of the August forecast round, members of the committee will consider all of the information available and how this affects the assessment of the risks from inflation persistence are receding. On that basis, the committee will keep under review for how long the Bank of England should maintain at current levels. And then it goes on to talk about in more detail the meeting, and the Bank of England MPC meeting, I think, was actually held on the 19th, even though the decision is released today at lunchtime. The meeting was ending the 19th of June. So again, some of the data that came out today, they wouldn't have necessarily seen that, but giving the voting record, I don't think that's going to make a big bit of difference. So just to summarise, the Bank of England has held the base rate today at 5.25%. However, the voting record mimics the previous meeting, with only 2 out of 9 voting to decrease the Bank of England base rate. No one's voted to increase it. Only 2 out of the 9 have said that they want the base rate to decrease. Now, on the 1st of August, if we've got the next Bank of England meeting, the issue that we've got is that we need a majority of people to actually go for a cut. By then, there's no Bank of England MPC meeting in July, hence why the next one is in August, but we will already have the July inflation print by then, so we'll see what the situation is with inflation, and we should have some more labour market data from there onwards. However, with the voting where it is, August might not be when we open up or break out the alcoholic or non-alcoholic champagne, so to speak, given this record. Everything is still in play. There's still a lot of geopolitical uncertainty as well that needs to be factored in, i.e. Ukraine in the Middle East. So that certainly doesn't help. So we haven't had our base rate cut today that some of us were praying for, even though probably the likelihood was limited. But given the voting split now, August isn't a dead cert, slam dunk, neither, in my personal opinion. I hope you found this useful. This is a mortgage broker / independent financial advisor's reaction to the Bank of England base rate announcement on June the 20th, 2024. Thanks.